What's up, everybody? Michael Silva here. Is volatility getting ready to explode? That's what we're going to talk about here on today's very shortened stock market brief. Coming into tomorrow, we have Fed Powell talking, okay? So today's price action overall was kind of muted, except for one thing. The Nasdaq was down 1%, and that was led heavily by the tech sector. Now, as we discussed on the prior episode, if the 10-year yield rises at a rapid rate of change, that could put pressure on heavy growth names, such as technology and also consumer discretionary, which remained flat for that day. Now, also to call out the dollar, right? So the dollar we had this piercing pattern right here that we discussed when it happened, and now what we're seeing is what's known as three white soldiers, right? That's three big green bars to the upside, three white soldiers. It's typically a bullish continuation candlestick pattern. There's no guarantees in this, but I figured I'd show you maybe what it might look like so you could see three big bullish candles right there. We pull back and we started heading higher as a potential example. Now, the reason I show you that is because being that it is the dollar, if we are going to head higher in the dollar, we know that there's a negative correlation there with many assets. I'm not going to dig too much into that in this episode because we've talked in detail on prior episodes about that. This right here, we talked about volatility potentially coiling up. Is it set to explode? Well, this right here, a lot of people give flack about using technical analysis on things like the VIX, which I understand, but I will call out, contraction leads to expansion. Expansion leads to contraction. And you can see that across the board on various different assets, including volatility. And remember, something like the Bollinger Bands is a volatility-based indicator. So you can see this big move down in the VIX, and you see price coiling up here, getting pretty tight at a prior area where we've seen support in the VIX. Now, I'm also calling out here in this green area where it's marked the tops of bear market rallies. So you can see this bear market rally where the VIX came into play, this bear market rally in August, where the VIX came to play, and then it started moving down. This one right here, bam, it came up and then started moving back down, and now we're here coiling up very tight. So if this starts to explode further to the upside, this could put more of a muted pause potentially on the S&P 500. Now remember, it's not a perfect negative correlation. Just because volatility is higher, it's just telling us that there's a larger expected move in the markets. Remember, volatility and the market can go up, but there's typically a negative correlation there. All right, so let's go ahead and look at the summation index, still pumping away to the upside, starting to get a small little curl right there. That negative divergence is still, it's just right in your face, right? You have a high to a higher high, a high to a lower high. So this may, if we get some more downside and the dollar starts pumping up higher and the 10-year yield holds at that or moves higher, this will probably, in my opinion, start curling over, and within a short period of time, we'd see that parabolic SAR uptick, which could potentially identify a change in trend, which we have called out multiple times before. Now, let's just take a really quick look at the S&P 500. We'll look at the SPY on the 15-minute time frame. Price action closed underneath the 5-day moving average. This is still inclining, okay? So as bearish as you want to be, understand that it's still inclining. However, we do have a couple of things to watch out for going into tomorrow's trading session. This could be a potential bear pennant, which could take us down to where the lower expected move, potentially more. Sometimes it cracks out underneath it, and then we could come into a prior area of support and potentially make an intraday trade back up to the upside. Remember, even if it comes down here fast, the 5-day moving average takes time to start curling back around. Now, if we start breaking back above this high and potentially this high, that could actually send us up higher in the S&P 500. This would start curling back around. The RSI would get back above 50, and then we'd have to start watching for it to get back above 70 for potential, the possibility for it to create a lower high or a higher high. We'll see what it plays out. Remember, we also discussed this possibly still being a big flag pattern right here. Okay, so let's continue on. We'll look at the Qs really quick. Also, Qs have a bearish type pennant pattern or potentially a descending triangle right here, which is bearish. But where are we? We're right there above the inclining 5-day moving average. Price action came back within this melt up channel that we've been seeing. Remember, this could be still very well a flag here too, right? It's just breaks down, consolidating, potentially moves up higher. We cannot rule that out as a possibility. So what you'd want to see is start to break some of these little highs right here to potentially go for, once again, back to the top of that channel. If we start breaking down, start watching the lower channel here along with the lower weekly expected move. Now, really quick on the zones, this is something that I share with the swing trading community. If you don't know what this is, it's $9 a month, and I give you a bunch of trade ideas. It's a lot of charts, a lot of different type of setups. I show my alerts on there. Sorry, actually, let me reword that. A lot of people think that this is a place where you go to just get your hand held. That's not what this is. You get access to a wonderful community. I show what kind of charts that I'm looking at, and I give like pivot areas, but I don't sit there and I don't give you, I don't hold your hand through all the trades. I only charge $9 a month, okay? Or you can get even a discount. It's like $7 a month if you just pay annually. Give a lot of chart setups. I give weekly expected moves on like 40 products. I give zones, and not just here. I give a lot more than that, and I give also links to my stock market indicator charts there as well. Now, really quickly on the zones, I want to call out something. The dollar, right? We had those 3 white soldiers, so they started moving up further. So this could be the start of a stronger move in the dollar, but it is getting a little frothy here at the upper side of the zone. You can see 103.53. And the high is at 103.76. So this can start to turn back up. We want to see higher highs, higher lows. That would bring the market obviously into more bearish area. And you also have the 10-year yield also pushing up to the higher end there too as well. Not too far from getting outside of it. You can see 36.41 and we close at 36.34. So if this starts to continue to move up, start to look at other bond products, right? So if this starts going down, things like potentially TLT, right, would potentially start to find its legs, or you can look at other fixed income products. Actually, within the zones, if you're in the Patreon, download the zone document and I share a fixed income slide with a bunch of different products. One that I'm looking at is IEF, so you can take a look at that there too as well. But one thing I also want to call out is this little green guy down here. This is XLE. XLE has been getting crushed, but I want to call out the chart. XLE really has not been getting crushed, right? So it hasn't been participating in 2023 or 2023, right? So it's down on the year, but really, I mean, it's just consolidating here, right? So we're coming in, we're pulling in, right? So tech has been the main focus. This could still very well just be wedging for a potential move higher. Now we're below the year-to-date anchored VWAP. You'd want to see it back above it, and we're sitting here at a prior area, as you can see, of resistance and prior support. So we're moving back within this zone. So it's always possibility that we can just bounce within this range and come right back up, which could create a possibility for a nice trade setup. Or also, if you want to be a little bit more patient, wait for that year-to-date anchor VWAP price to reclaim that. Or if you even want to be more patient, wait for price to tighten up and see what it does. And if it is continuing to get bullish, wait for it to break this prior area of resistance up there as seen on the screen. Now, I also want to call out oil, right? We had a gap down and we finished not quite through the 50% thrust line. So, this is still a bullish reversal type candle. As you can see, we had some strong volume on the move down. Then we gap down and we finish, 25% or so through this candle body. So this is a possibility of a 2-bar reversal pattern. But if it was a little bit stronger to the upside like that dollar move was, that could potentially mark a reversal there. So we'll see how it follows through. You can see we're pulling into a prior area of, right, support, right? And it bounced from these levels, and now we're putting in somewhat of a bullish candle there. So if we do get a move here, this could open up the opportunity for a possibility of a good trade, either intraday or a small swing trade. That's all I got for you on today's episode. Everybody have a wonderful night.